Hey, I'm Jimmy. In this video, we're going to present two stocks that could outperform the market if the economy slows or if a recession were to hit. Now, this is a collaboration video between our channel, Learn to Invest, and Positive Investing. Nick over at Positive Investing puts out a lot of good content. You should go check out his channel. There's a link in the description below. It's a top link in the description. So we're going to show you two stocks. Nick is going to present his favorite recession-proof stock, and then I'm going to present a stock that I believe will perform well if the economy moves forward at a slower pace. We're both going to give our reasons, and hopefully you'll find it useful and interesting. So let's kick it off with Nick's first pick, Kellogg's.
Thanks for the introduction, Jimmy. Kellogg's is my pick, and there's a few good reasons why I like this stock right now. Ever since it peaked in July 2016, the company has been selling off, and really begs the question, why am I looking at Kellogg stock at these current prices? Well, I think that we're close to, or may have actually reached a bottom here personally, in Kellogg stock. And I think as they're transitioning their company and their brands, they are going to become a lot more profitable, and they're going to start growing incredibly well in the foreseeable future. Well, I think we're actually close to, or may have actually reached a bottom here in Kellogg stock personally. And this is as a result of them transitioning their business to focus on more successful brands. And speaking of brands, Kellogg's has a wide range of brands out there. Some of the most well-known ones are Frosted Flakes, Eggos, Pop-Tarts, and a lot more. If you ask me, this brand isn't going away anytime soon. And in fact, the reason why I included it in this video was because I think that this company is in turnaround mode and it will start dominating the marketplace once again. So I listened to the last earnings conference call that Kellogg's had, and this is what piqued my interest, and I do want to share some things from this conference call with you guys here. At first glance, it really looks like growth is going to keep slowing in 2019 all the way through till quarter 4. And in quarter 4, where we may see some upside, I think there's actually some opportunity here as an investor because it's only a few months away, but the stock is still being beaten down and priced like growth is completely done in the company. And looking at the company's projections, you can see that yes, the last few years have had a decline in net sales, but again, the company was transitioning to a new model. And 2018 was the year they finally saw it begin to turn around. And 2019, they are predicting growth for the first time in years. And in my opinion, this is just the beginning, and the market still has yet to realize this and price it into the stock. And I know I keep saying that they're changing their model, but this slide really summarizes that for you. They're focusing on their biggest brands like Pringles, which had immense success during the FIFA World Cup last year, proving that the model that they want to focus on and pursue is actually one that will work. But there's also a lot of other big names that they'll be pushing, like Fruit Loops, RX Bar, which they acquired recently, Rice Krispies, and much more. And this will continue through 2019 as they continue to put more money into these investments to begin growth in the company once again. But don't expect to see this in the first half of 2019 because time and time again, they do reiterate that it'll be in the back half of 2019 where investments will start paying off for the company. And I think that these things will actually pay off pretty big over the long term. And Kellogg's is a very simple business to understand. It's a brand that a lot of us have grown up with. And that's actually a very appealing reason to me as to why I would consider investing in Kellogg's. I've been eyeing this company stock for years, but have not found value in it until recently. As we came down to a 200 moving average on the monthly, which is usually very strong support for stocks, you can see that there's a lot of buying happening at this price. And even previously when we came down to this level to test the 200 moving average on the monthly, buyers stepped in and there was value found. But I don't expect the stock to really turn around overnight. We could move sideways for another couple of months or so. And it's a slow and steady stock. That's something you really have to understand here. It's not a get-rich-quick scheme here, and I believe that by the end of 2019, we may have actually started a reversal in Kellogg's, and we may actually start moving up higher. And with the PE under 15 and a dividend yield of over 4%, it's really hard to argue here that you're not getting value from such a world-renowned brand, a company that has worldwide exposure and has a lot of strong brand names behind it.
Now, I'm a big fan of Kellogg's stock, and they seem like a good value stock at this time. And as Nick pointed out, they seem to have a solid business plan going forward. And historically, food stocks have been great recession-proof stocks. Along those same lines, but a bit more aggressive, is my stock pick, Wendy's. I believe that Wendy's stock will do quite well in an economy that doesn't crash and it isn't soaring. Instead, it's just sort of slowing, sort of like the economy is right now. I'm thinking, let's say, GDP growth of 2% or lower, but not going negative. Now, if we were to have a full-blown recession, then stocks like Kellogg's or Coke would be a much better pick. And if the economy just stays slow, I think Wendy's would do well. And here's my reasoning. Wendy's is one of the largest quick-serve hamburger restaurants in the world. Wendy's currently has over 6,000 restaurants in North America and only a bit over 500 globally. So I believe that there's a giant opportunity on the world stage for Wendy's. But here's why I like Wendy's stock right now. So in the past few years, Wendy's has done a ton to position the business for growth. So about half of the restaurants that they have been remodeled in the past couple of years. And it seems that the remodeled locations are producing significantly more revenue than the older locations. And this is key because this is the chart of revenue going back the past 10 years. And as we can see, it's been a rough few years for Wendy's. But last year, we saw the first revenue jump since we saw a small one back in 2012. But here's where it gets interesting. So back in this time period here, well, Wendy's owned Arby's. Then in 2011, they sold Arby's to the ARG Holding Corporation for about $130 million in cash and 18.5% of ARG. Well, ARG goes out and they buy Buffalo Wild Wings. And last year, Wendy's sold their remaining stake in ARG for about $450 million in cash. So now Wendy's is sitting on a bunch of cash and they've been doing whatever they can to make their business more profitable. Now, this is a chart of net income going back to 2009. And as we could see, although revenue was declining, net income was getting better. And another way to look at this is net income margins. So net income margins have clearly gotten better since they sold Arby's back in 2011. Back then, net income margins were just 1%. And last year, well, they were over 9%. So what do we think Wendy's stock is worth today? And what do we think they will do with the $410 million they have left in cash that was on the books at the end of 2018? So the first thing I think that they're going to do is do stock buybacks. They have a history of doing this. They've done a few of them over the past couple of years, and that should help the value of their stock. But I also think that they may make some more strategic acquisitions and almost certainly continue to remodel stores, which hopefully should continue to help revenue. So to value the stock, let's look at discounted cash flow. So to calculate our fair value of $24, well, we used analyst estimates for free cash flow going out to 2022. And then we applied a weighted average cost of capital of 7.5%, a perpetual growth rate of 2.5%, which is about in line with the long-term expected growth of GDP. That's generally a fair number to use. Well, this gives us today's value. Then we take that, we divide that by the shares outstanding, we end up with a $24 fair value for Wendy's stock. Now, if you're wondering where I got the weighted average cost of capital, well, I actually have a few videos on how to calculate it. Now, in this case, we should have actually, instead of using weighted average cost of capital, we should actually be using required rate of return instead of the company's WACC, which is what we did use. But I used WACC, and I think it's a good substitute since required rate of return would vary from investor to investor. That would be impossible to do in video. So WACC is generally accepted as a good replacement. So when we switch to Wendy's stock chart, well, we can see that the stock has actually done quite well in the past few years. Now, this is likely due to the improvement in both profits and ultimately profit margins. Well, our calculated fair value is up here near the $24 level, and that's about 30% higher than the current value of Wendy's stock. So to wrap up, I like Wendy's if the economy stays moving along slowly. And I agree with Nick from Positive Investing that Kellogg's looks very good as a recession-proof stock since those types of company do very well in that scenario. I would expect Kellogg's to perform better than most if a recession were to hit the economy. Let me know if you agree with these picks. Perhaps you would consider competitors of theirs like General Mills for Kellogg's or McDonald's for Wendy's. Let me know what you think in the comments below. If you haven't done so yet, hit the subscribe button and go check out Positive Investing. There's a link in the description below. Thanks so much for sticking with me all the way to the end of the video, and I'll see you in the next video.